you knew type shit. I just thought you.
What's up, guys? Good morning. Sorry, I was just doing a few things. But good morning. Sit back, enjoy the show. All right, there's a lot going on, though it may not seem like it. We have GME up here. I'm gonna start with GameStop. I started the stream too soon. Oh fuck. Here, I can do this later. So I apologize. Hit that like button, subscribe. Donation links are down below. If you guys make any money with us, listen to what I say carefully. I'm not going to tell you what to do and what not to do. Things like, you know, where to get long, what you should do. I'm just telling you guys what I'm seeing and what I'm going to do with my money. If you follow along, you know, you get paid handsomely, you get rewarded, you can give back to the stream. That's all we ask for. Hit the like button, subscribe. Really, more importantly, if you make any money, give it back again. The reason I created this channel is for a few reasons, so people could actually get a real education on how to do this, even though we barely get anybody here. Secondly, you know, there's just a lot of, I feel like, misinformation when people pay for some programs, maybe not so much on Discords and stuff, but it's neither here nor there. Just watch what you do with your data and where it goes and who has it. Okay, and if you're paying them to make any money off of you, if you're paying them to, and they're already making money off of you, you know, it's a shady world out there, and they can, you know, use the market as the front, right? As the front, so you don't see what's going on in the back. All right, Tesla. I'm still watching Tesla. I want you guys to see this level right here. All right, this level right here at like 184. If we break this, obviously 182.50. But if you guys look at 184, okay, if you guys look here at 184, you guys will notice that there is, you can look at the top right, all right, you can look at the top right. You can see 184 was just it's like the middleman between 182 and 186, but it's been sitting there. Turned it into resistance. We broke it Tuesday. Well, let me back up. Monday, that was our first real pullback, right? And we kind of chopped around up there. Thursday, not so much. Friday, it was an area of resistance. You broke below it, and once you started to turn 184 into resistance, you went right down to 177.50, 178. All right, but either way, you broke 180. All right, so what I'm going to watch for is to say, hey, and we have VWAP lining up, Tuesday's VWAP also lining up there at 184. This isn't a major level, so I don't want to get it. I don't want you to like solely, you know, think that I'm making this a level, but I'm certainly watching it. You guys can see here, it's sitting here. It's sat here since, it's been here since 8:40 this morning, and we're still here. So if we're below it, my thoughts are, you know, do we get below yesterday's VWAP or Tuesday's VWAP, and do we start making 184 resistance? You'll probably hear my cat in the background. I don't know what she wants. I can't do anything. But 186. So the two levers I'm going to watch for is this little range here, right in here between 184 and 186. But I'm really wondering what's the move, right? Am I going to get, let me pull this back a little bit. Can we use a bounce off of 182 to get a short rejection up there off of 184 is what I'm getting at. Okay, so depending on where we're at when we open up, do we try to take a straight, do we get a pop up here? I personally think you get another day of just consolidation, and I may try to get long down here at 182. I was concerned with the volume from Tuesday, but it held. At the end of the day, it held. Let me do something really quick. I still have some more, so let's keep it moving. Again, if you guys have any questions, you can post them down below. Let me bring up OBS real quick. Where's OBS? Come on. Alright, let me do this. Just in case. Just in case. It wasn't even supposed to play the music that was playing in the background while I was setting everything up either, because the desktop was down. So I don't understand why it was playing the music. And again, I'm sorry, but my cat is just obviously trying to get my attention. She's going to have to wait. You know, she does this every day at 9:30. Alright, so Tesla, I'm going to be watching for 180, pullbacks into 180, fairly easy. You know, I am under the belief that, you know, I think it's a little bit overdone. I think you had some nice selling pressure. You know, we'll see what happens here, right? You get a pullback into 182. You just have to watch for that minor possible rejection up there in the 184 area. That's all. I'm going to keep it at that. So 182, 182 longs. It's like 182.50 to 182, and then 186. That's the range that I'm looking at for Tesla. We'll see what the volume is, but one more day of a consolidation and we hold above this level, then I really like the long. All right, I really like the long. On a daily perspective, you know, another pullback day today down here in this area should get your 20-day moving average, the green line, if you guys can see it. Should get that 20-day up in here at like 180 or so. I don't want to get back down to 180. I'm going to be honest with you guys. I don't want to see Tesla back down here. I don't want to see 180. I honestly don't even want Tesla to crack 182. All right, that's not a good look. That you're just taking back all the good that you did is what that tells me. All right, that was a strong break on some alright volume, and we'll find out. You know, I just think another test of 180, then I think bears are going to step in and they'll have their way with it. Give me 1 second, guys. Hold on 1 second here. All right, so that's my watch. You can see this is a nice area we've been holding up here at 182.50. You don't want to see that thing break. So if we bump back into like 186, 185.50 area, I want to see us get back above here, and I want to look for that 188, 189 level. All right, I want to get back up there. I want to get back up to 190. Coinbase is still on watch. All right, we've had a minor pullback here. I have not looked at Bitcoin. Let's see, what do we have? We have 10 minutes. Let me set my, give me 1 second. I'm going to set my charts up. I have a whole list below me, so if you guys have anything you guys want to throw in the chat, you know, it's pretty much go time. So, bounce backs into the 20-day on Coinbase. I would like to see if we can get a rejection. If you guys notice here on Bitcoin, I do know we did start to turn that 50-day into a rejection point. I think from what I remember, yes. You guys can see here. You can see how we were just holding the 50-day. We broke it. Now we retested. What's going on? Are we going to test 60,000 again? It wouldn't surprise me. It wouldn't surprise me if they really want some more buyers to step in here. The volume's drying up. We started to see a lot of the selling. Like, look at this selling. A lot of the selling pressure is stepping up in a big way. And it hasn't changed. Right? This selling has not changed. I mean, if you were to put a line here and count all the red that's above it versus all the green that's above it, you're going to find out who's the clear winner, and that's sellers. Okay, so I think there is a pullback coming for crypto. I think you get a little bounce higher. I think you can get a bounce higher. Sorry, I'm trying to log in real quick. Oh my fucking god. So I think we could try to see one more bounce just to get people kind of like sucked into the long side here on Bitcoin. The levels that I'm going to watch for, and you're already rejecting off of it, is 66. Right? You can see the 66 level rejected this morning. All right. I this all kind of ties in too. So watch 66 on crypto or Bitcoin, I should say, and see if you get that pullback into 64. And then I will look at like Coinbase for the kind of the same setup, but it's not really showing me the same setup. Or you got that bounce back. Okay, so it would be right here. That bounce back and rejection on crypto, or I should keep saying crypto, but Bitcoin is up there at 244. Now you can see Coinbase is pulling back right now into that 236, 235 level. 236, really. If we break 236, guys, you have really nothing stopping you to 227, and that's a nice $10 move. So I can tell you guys right now, I may go for it. I may go for this because I do think we could probably break it. All right, I think we can break this. I don't see it with Bitcoin. I don't. I think you just have this nice rejection. If you don't know what I'm referring to this level right here. All right, this level right here at 66.3, and then 66. Sorry, 66.4, 66.5, whatever. That whole area right there. All right. So you can see back here was also another area. So you are coming into support right now. So I wouldn't just shoot from the hip, because you could see no. You could see this minor weird ass level at 65, like 65.3 to 65 hold. But what I would expect is a bounce, and you get a bounce back into 66,000, right? You get a bounce, just a small bounce, something that looks like this. This is what I'm looking for. Get a small bounce right there into that level, and then you get your downside. And maybe this takes you down here, right? Maybe that bounce comes in down there, right? But I think you get a bounce here off of 66, suck people long, and that's, you know, that's just my opinion. We'll find out very soon. All right, good luck today. I'm gonna go. What do we have? 10 minutes. Let me go check her food. Let me go check her bowl real quick to make sure she isn't wanting something. And we'll be right back and get right into it. All right. So Coinbase, but so Coinbase is real quick though. Coinbase is below that 20-day, so I will be watching 240 on Coinbase. All right. If we cannot get back above 240, or if you quickly get above 240 and you see 245 act as a rejection point, then I'm going to look to get this thing to pull back down into the 50-day, if not lower. But the 50-day is a nice little area of support. We could see this thing back down at 230. So 240, 245 rejection on Coinbase, targeting 230. Okay, targeting 230. All right, so she's got what she needs. All right, the two others that I'm watching, it's going to be GameStop and DJT. Even though we only have a few minutes now. Okay, so we have NVIDIA down here.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating
Damn,
risk.
it's down to the 200-day moving average already.
To manage over $1 trillion in assets worldwide, solving for the needs of investors.
Man, guys, you guys know that we wanted to short this, right? You guys know that once we broke this $42, 43, 42.80, that we told you guys we love the short here, and I forgot about it. I just forgot about it, and I thought that I came back and randomly checked on it. In last week, look at this. What was this? Tuesday, Monday, Friday, Thursday, like fucking slicksters, man. I tell you, man. Anyway, so what would I do? What would I do? What would I do? Bounce backs. Holy shit. You have nothing. If we break this level, guys, we have nothing stopping us from 30 to 25. You gotta watch that 200-day moving average there. We only have a minute 30. We only have a minute 30 now. Are you okay, Turkey? She got up and left. Yep. Watch Friday's low. Watch Friday's low and watch that 200-day moving average. Alright. Why is that? So if you look here, you'll see this was your level of support down here. Friday's low. This whole area, it's like $31 to $30. It's not pretty, but you know, there's your 200-day. You wicked below it. And I think if you get something like this, you know, we're sitting here at 28, 26 or whatever. I think if you get a little pop back into Friday's low, back in that support level, 200-day, this low, then you see DJT, nice big day down into like 24, 25, back down into this level down here, right? I think you can get DJT back down into there because you have nothing stopping you once you get it. Once you get below 30 bucks, you start turning that into resistance. Ain't nita nada nothing. Ain't nita nada nothing. This big long candle, that's what she said, is like a brick wall, right? It's just separating all that other nonsense that you don't even need to see, right? It's just like, yep, it cuts it off, right? So you just take back that big move. And listen, we've been making these setups and finding them. We've been finding these setups and hitting them. So good luck today. If you need any help, reach out. If you guys make any money with us, donate down below. It goes to the stream, pays for things like squawk boxes, news articles, news events, so we can stay up on the latest news. There you go, DJT already. She's holding strong right there now. Again, look for Friday's low to Friday's close. That's what I'd be looking for. Alright, good luck. My stuff is frozen now. You gotta be fucking shitting me, bro. You gotta be shitting me. Look at that volume coming in. You gotta be kidding me, right? can't do anything. All right, so there you go. And look what's happening. There we go. Come on. All right, and look at that. I really, really, really want to try to get along into 190. Now look, what did we say? Look for the bounce back on 184. And if you start rejecting 184, right? Take pivot longs down through this area down here. Look for the bounce backs. And just do what it does. You know, back here this last Friday, again, I'll reiterate, you got the bounce right into 183.97. Really, it's like 184. It's like an area. And then it ended up breaking. Once it turned 184 in a rejection, it then turned 182, 182.50 into a rejection. So it's really, you know, another day of a consolidation and another pullback. I just don't want to get back down to 180. That's not bullish. Going back down to 180 is not bullish at all whatsoever. All right, holding, you want to hold 182. You do not want to crack 182. Once you get back below that double top, it's over. You're just asking for trouble. It's just, you know, it's just my opinion, but I truly feel that way. And there it goes. Motherfucker, man, I swear to God. I just was a little late there. Gotta watch 184. Alright, even if you get a bounce here in a 184, you have VWAP and everything coming in right there. So I like this low volume pullback. I like that low volume pullback. I like it. Again, welcome. If you guys could hit the like button, subscribe. If you have any questions, just throw them in the comment section down below and we'll get right to them. You know, the goal is to help you guys make some money because the market offers so much opportunity, and there's a lot of people that don't even that can't even like remotely relate to the amount of opportunity that is in the markets day in and day out. You know, just, it's a shame, but you know, it's not for everyone. I will say that, but all right, I'm looking at the 185s. I'm gonna look at the 185s here on Tesla. I don't understand. Be careful with these puts, guys. Oh, there it goes. 182.50. You are now below it. Damn, that was it. That's it. Dunzo. I don't understand why those deltas are like that. Jesus Christ. Look at that, guys. I told you. I told you, you did not want to break that level. You didn't want to. But you had to do it. She had to do it. Unbelievable. I mean, she just can't hold a bid. Once you couldn't hold 186, I think that was your sign there. Alright, what are we looking for? So we're going to eye up the 20-day moving average. What I'm seeing something that's really, really weird. Like, for real. I'm seeing something really weird, guys. Something really weird going on. Let's pull up the SPY. I don't know why it's on a 5-minute anyway. It's not what we wanted. There's something really fishy going on, guys, with the options price. There's something really weird going on with it. Like, for real. There really is. Like, even now, it still hasn't... That's just wild to me. So what I'm going to tell... Okay, never mind. It's changed up both ways now. But it's still leaning. If you look at the calls are still leaning to the long side. But, I mean, really, it's telling you that there's a consolidation between 182.50 and 180. So, I'm actually not going to pay attention to it, especially with the volume that came in there. It's not very... It's the volume's pretty low, which is okay. Fuck. I swear to God, man. One little mistake with the mouse, because you can't breathe on it. Fucking breathe on it, and it moves, or it starts doing whatever it wants. So the deltas on here, they were really... The calls were still positive, like, or I should say, over a 30 delta, $3-4 out of the money, while the puts were, you know, you had a 40 delta and then a 25 to the downside. I'm like, wait, what? So be careful. Be careful. But now they took back that call side, so it's kind of saying, hey, watch Friday's price action. See if we can break 180. I don't know if we do because of the volume. Because we have... Okay. I still don't like these. You see how you have one out of the money put and it's at a 34 delta? Now it could be because we're coming towards the end of the week, but it's just really weird. It's a really weird move. still feel like they're telling us to take the calls. Yeah, look at this. The 185s for 126. We could have got them for 90 cents.
And we got it. It was last November and December. Small cap valuation. So the S&P 600 went from 12 to about 15 and a half, where they are now. So they're no longer cheap. To really get true sustainable broadening, it's always about one thing, and it's always about earnings broadening. And yeah, it's difficult to get that without the Fed cutting rates after a tightening cycle. And your work keeps bringing you back to this quality.
Still liking it. There's just no volume.
It seems as if that is what the market has been wanting for a while and has capitalized at a pretty high rate. So I guess at what price?
All right, I'm gonna get off of this thing because I think Tesla's just. I'm just gonna ruin my day with it.
Investors are buying quality companies for reasons, better balance sheets, better income statements.
All right, Coinbase is up at 240, guys. Coinbase is up at 240.
Catalyst does that shift. So either
Coinbase is up at 240.
broadening out of weaker economic activity
Nvidia's trying to bounce through high a day. Boeing garbage.
with better fundamentals are typically still out.
Dude,
And I guess the question, I know you do it more on an equal sector weighted basis, right? That's what you prefer to approach it. But it seems as if
it's a nice pullback on the SPY.
approach would sort of ratify just buy the same handful.
So SPY held up. Dude, what is going on with my charts?
And all the price momentum.
Like,
If you look at one of our favorite ETFs, the way to
I don't understand.
QUAL, which
I don't understand at all. Look, it regained 182.50, guys. Tesla regained it. I knew it. I knew there was some shading. That's so funny. This is why it's important to read the market internals, guys. That downside did not feel right. It's like it was just like that option. I'm like, bro, what is there's a mix on what the chart's doing versus what the chain's telling me. I think this is what a lot of people lack is, you know, seeing what I just seen right there. You guys heard me say for 10 minutes, yo, something's going on with these, like something, like it's telling us to go long. The volume doesn't support it, the chart doesn't support it, you know, but it's telling us, hey, if you get that 185 long, you're already up 50%. You're already up 50% just on that bounce to 185.
value and growth investors kind of in the middle, looking for profitable value, profitable growth.
It's $500 on $1,000, guys. However you want to look at it. I look at it as a percentage, whatever you guys use. I don't know what your guys' position size is. So you're 2,000 position size. You got anywhere with $1? There you go. You're up 300. You know, 2,000. You're up $600. Little over.
Our economics team thinks
Even on a market order in and market order out.
last month's CPI report was the end of the acceleration in some of these insurance-related items, and that's really the only thing holding things up. I mean, people talk about there's two things: shelter and insurance, and the thinking was that shelter insurance is beginning to crack. You don't have a problem with that one? No, I think that's right. And if this continues, what we saw last month, it's going to be really hard to print a core inflation month-on-month level more than 0.2.
Part of me still wants to go after it.
I'm not saying it's going to persist every month in this magnitude.
Bitcoin. All right, I'm going to look at Coinbase real quick and Bitcoin. So we said we would look for that pop. Looks like it's trying to do it now. Just give me the 15-minute chart.
And it is true that typically the unemployment rate starts to go up slowly and then goes up quickly. And if you look at the last 8 recessions back to 1960, I think we can look at each one of those and say, well, what was going on that perhaps tipped the economy, or really what
Yep,
broke?
look for a rejection here. Let's see, we already rejected there.
Of course, there's always risks.
See if you get that 66.
One of the things that's not
Looking for a rejection of 66 on Bitcoin. No, stop.
today. And then we have, a flexible labor market. We have this fiscal spending that's helped offsetting the impact of higher rates. So softy locks is also a slow down. Or call it, not a recession, but a slow softening. So if long as that it continues at this moderate pace, I think it maintains a good backdrop for equities. Finally, how do clients express their interest or concern about election uncertainty, either here or UK or France, and geopolitics?
Oh my god, shut the fuck up.
It's on the wall of worry.
How do they, if for election interference?
Volatility now in Europe
Same people told you that there wasn't an interference are the same people asking questions about interference. Tell me, like, make it make sense, please. Please make it make sense.
Going to be tomorrow? What's the Fed going to do next? What's the unemployment rate going to be the beginning of the month? And so I think that's going to become more in focus as we get past, closer to Labor Day. But it's becoming a growing concern, but still something that should be played at the idiosyncratic level rather than the
All right.
level.
So what I'm gonna do is,
Really good stuff. Thanks so much, man.
all right, let's do this.
Today we will get a little Fed speak out of Kashkari this morning.
What time is it? It's 9:47, 9:45. We have just a couple minutes here.
Pretty much the highs of the morning as we got S&P record high 5,500. Stay with us.
Okay, nice bounce here on Coinbase. Really nice bounce. So that's what we said pre-market was. We said look for Bitcoin to try to bounce. Look for that bounce. And then try to look for the short. Or not try to look for it. But I wanted to look for that short on the bounce back. I mean, really, we need 235 to break and then try to get down there at like 230. So right now you got a $10 move possible from 240, 245 back down into like that 50-day moving average at 230. And that's what I'm looking for.
What if nobody buys them?
That's me. Or what if everybody buys them? I hadn't thought of that.
That's probably not going to happen.
Can we handle that kind of traffic?
The network can handle it. I downloaded 8 hours of
That's a crazy tail there.
during our last video call. I'm learning a lot.
Look at that tail. Look at that hourly tail, guys. Wow.
I'm the richest guy in the world. I have time to give. I have people I can count on. And a million stories to share.
The key to being rich is knowing what counts.
They said the key to being rich is knowing what counts. It's only one thing that counts at the end of the day. Let me... Let's see here. I'm sorry, I gotta fix my screen. My stuff is acting up. Charts and stuff are acting up today. Everything has low volume, unfortunately, which isn't cool. All right, I'm gonna go after it. All right, let's go after it. Actually, hold on a second here. Hold on one second. Yeah, because we need to break. We need to be able to break this 240, or we need to break, yeah, that's another hammer tail. I'm just watching the 9 EMA and VWAP here on Coinbase. So here we go. This could be a minor level at 242.50. Dude.
In America, leaders, especially people who are leading interesting businesses, have a unique role in shaping the way in which people think and what they do. And this is an issue where to speak up is going to require absorbing inbound. And that's how you know you're doing something important. More from Sarah's exclusive interview coming up next hour. Make sure you stay with us.
I can't do it with these charts anymore, man. Seriously. I really can't. I really can't.
The cash I got from Aflac helped pay for medical expenses, show, but you might get some useful information.
Squawk Box, weekday morning, 6 a.m. Eastern, CNBC.
Okay, Delaware injured workers, now what do? Document this injury. Many cases are negatively affected without an incident report. Get a company-issued incident report or download one from frybotlaw.com. Complete the form, sign it, give a copy to your employer, and keep a copy for yourself. Then, call my law firm so we can take over your case. I'm Fred Frybot, and we are Delaware's injury lawyers.
Want to save on some of the biggest names in streaming on the network made for streaming? X marks the spot. Now you can add the new Xfinity Stream Saver that includes Netflix, Peacock, and Apple TV+. That's Xfinity Stream Saver for just $15 a month. All your favorites, all in one place. Only from Xfinity. For more watching and less spending, X marks the spot. Supporting the network made for streaming and for non-kid stuff.
Amazon is changing its packaging, ditching plastic in favor of recycled paper. Diana Olick is at an Amazon.
Okay, so why did GameStop not save itself?
Hey, Diana.
This is my point.
After extensive testing with employees, consumers, and third-party analysts, Amazon has put into motion one of its most ambitious sustainability efforts to date. They're basically saying goodbye to this and hello to this. It's Amazon's largest plastic packaging reduction in North America so far. Recycled paper is replacing the 15 billion plastic pillows used every year.
They're difficult to recycle because, first of all, you have to pop them.
You have to pop it. And they can't go in a curbside recycling bin. Paper may also just work better than plastic.
This paper is a little bit softer. It's made with 100 recycled content, post-industrial as well as post-consumer industrial recycled content. And that allows the items to kind of cushion in there rather than bounce.
In addition to losing plastic, Amazon is using AI to right-size its
So I am looking for a rejection on XLM. It's been really, really weak. All right, look for this bounce back, and look what we have here to the left of us. You guys, we have nothing. This is just a straight up move. You can see it straight down. You get these pops. Look at what was that, Tuesday, where you got that rejection. It is a little overdone. There is somewhat of a cup and handle here. I just don't think. I think people are going to see this. This is a perfect cup and handle. Nice inverse head and shoulders at that. What, you know. I just think that this up, down, up, down, up, down. I mean, the price action could be a little bit tighter to the downside. Like, this is tightly up. You want to see that handle tight. I don't know. I'll watch it. I just think we hit the 100-day. Maybe consolidate for a little bit, but a bounce back into the 100-day on Exxon. I got to look for moves back down into like 105. I think you're going to start seeing people take profits on energy. I do. Energy's up at highs. So we'll see. We'll see. I don't know. Maybe they want to start taking profit in front of the election because they don't know what's about to happen. I don't know. But you can see every time you get up here to these highs, they pull it back. They start selling it off. I don't know. It's something I'm just watching. We'll keep an eye on it. Apple's pulling back. So coin is not moving right now for some reason. Not sure what's going on. But I am going to keep this on my watch list because I want to see if we can crack 235 off of 240. It's not really moving, so let's look at Tesla. See if it ended up recapturing. It did not. Another probably another slow day here. Yeah, like Tuesday was just awful. It was just awful. Let me look at the scanners. There might be some small caps. Microsoft is at those previous highs. No, it's actually under it now. Microsoft is actually under those previous highs at 442.50. So, what can I do? What can I do here? Let's go see what we have. NVIDIA. So everything is just flat. Okay, copper. You have a little bit of energy. that's bouncing, but I think you're getting the bounce from Tuesday. Like semiconductors were strong Tuesday, and all you're doing is getting that pullback off of there, and you're getting a bounce back on off of the sell-off. And I think that this is more or less the like small move within the move, if that makes sense, right? Like energy's been selling off. You're getting that take profit. Take profit day where you just get that bounce back, start turning the previous areas into resistance. Gilead, oh that's right, DJT, and Reddit. Those are the names we need to watch. Well, we didn't quite get to Friday's low or Tuesday's low, but I told you, look for the pullback because if we start to sell off, we have a lot of room to the downside. We have a lot of room to the downside. I should have just kept my eyes on this thing. I don't think it's over either. I don't think it's over. So again, I'll go back over this. I said bounce backs in the Friday's close. The 200-day up there at $30.70. You didn't quite get there. You got to 29. It looks like, yeah, you got to 29.37. Just so you guys know, the sentiment could shift on this like on the snap of a finger. So be careful if you're going to trade DJT. That volume is so bad. Let me pull up. Come on. I don't... My stuff is messing up here. You have ZA... So some people are talking about Zap. Zap is going. Yo, none of my stuff is saving. I'm having such a struggle today with just getting my charts to like stay where they're at. Like if I change to a new ticker, it shouldn't matter if I moved the chart. It should just go back to where it was and where it was saved when it changes tickers. I did see a headline that the NASDAQ, there were some problems with China. There's some names that are coming from China and Hong Kong that are trying to get listed on the NASDAQ. And there was a stock that went 300 and some %. And I think, the NASDAQ is kind of like raising their... I don't know what a saying would be for that, but they're kind of curious as to what's going on. Like they're kind of, I guess, being reluctant to let them, be publicly or listed. They're reluctant to get them listed. I mean, honestly, in my opinion, who cares? I mean, they want an orderly market flow. Like, I get it. You don't want to just disrespect the market like that and whatnot, but...
Meantime, NVIDIA is the big stock story of the day. Shares continue to rally, as we said, the chip giant becoming the most valuable company, surpassing Microsoft and Apple in market cap. Joining us this morning is Stacy Rasgon, Bernstein Research Managing Director and Senior Semiconductor Analyst, has an outperform and a target of 130. That is below the current price, Stacy, and we've seen some 150s, some, I think, Rosenblatt's at 200. Are you staying put?
Look, we've had this conversation before. We don't change the target price every other day. The stock's had a really good run, especially recently. What drives it? Look, it's going to be earnings and it's going to be multiples. You look at where it's trading. Multiples come up. It's probably mid-40s now, which is not that bad.
I'm sorry, I'm looking at Tesla.
Look at where the numbers are going. Like, it's not surprising that the stock has had the run that it's had, and we'll revisit the target in good time. Depending on how things go. So
Yeah, there's no doubt.
don't take it too serious. Don't take the individual stocks too seriously at any given point in time.
No, you're right, and it's been hard to keep up.
Let's see, can we reclaim this?
In general, but I do
It's a good problem to have.
Yeah, if you've been recommending it, no doubt about it.
Let's see, let's pop back into 185.
Valuation where it has been before, because I've been trying to make the point that it was at
And what did we say? 184, right? 183.50, 184. Watch that area. You got to get above it. I think you start to see a pop into that area now. Let's see if we can't hop on this. Hold on. I haven't been watching, keeping my eye on level 2. Man, I don't want to.
where that sits now in terms of whether you think the
All right, we could have a nice test, a high a day. Fuck, I told you guys, man. I was really strong with this fucking long here.
Well, I think it's clear that their customer base at least is broadening out. So they still have a lot of concentration at the large hyperscalers, which makes sense. Those are the guys with the big wallets. But I think they said on their last earnings, I can't.
Man, you could have got these at 90 cents. I told you guys that Tesla, I'm like, yo, I don't trust this down. I don't trust this pullback. You know, there's something going on here where I think we go higher. You just have to watch out because I actually may start to switch to the short up here at like call it still right up there like 183.70, 183.75. Right in front of that 184 level.
And along those lines, you want to see like more enterprise adoption. You want to see those guys building business models on this. And it's still early, clearly, but we're starting to see signs of that. So I think that's a good thing.
Yeah, nice piece in the Times just this week about AI driving drug discovery. To your point, Stacy, always good to check in with you, even though the story kind of remains the same. Talk soon.
Yeah, you bet. You bet anytime.
All right, NVIDIA, one of the stocks pushing this market higher. In fact, accounting for most of the S&P's upside. The S&P and NASDAQ hitting new record highs this morning.
Man, the long is still there.
And still a big focus for investors. Joining us now here at Post 9 is RBC Capital Markets Head of U.S. Equity Strategy, Lori Calvasina, and KPMG Chief Economist, Diane Swamp, also with us this morning. Great to have you both. And Diane, if we could set the scene maybe more broadly here, we did get this rate cut from the Swiss National Bank, Bank of England holding off but leaning that way. There's a broad, I guess, positive thesis that the economy is normalizing along the lines of inflation, perhaps growth rates, and central bank policy. Can it be that good? Are we going to pull it off?
I certainly hope so, although I think we're in this sort of watchful waiting period where it's not whether or not central banks cut this year. They've been much more dovish than even expected on their statements
fuck?
moving in that direction for August, hopefully. But the Federal Reserve also sort of wanting to make sure that they hit the landing and don't overshoot, although I do think the risk is still high that they do overshoot.
Just keep an eye on your deltas between the calls and the puts, okay? Fish out the difference between the two. If you guys have any questions, let me know in the chat. You know, that's all I got for you. And there fucking went AMD. You fucking piece of shit, man. It's just one of those days, bro. Just one of those days. I had this Tesla AMD. You gotta be kidding me. So, pre-market, if you're with us pre-market, I don't know if I did it with you guys, but I was watching this level right here. I was watching this 156 level, and saying, hey, you know, 157, 158, if you start to reclaim those levels, and look at the volume, just shot straight up. So, pullbacks in the 160, I guess. That's what you could look for. 160 on AMD. You know, this is why it's good to have a group of traders, because, you know, if I find it, you find it, or anybody finds it very early, we can all attack it. And that is the, you know, that's what is helpful with trading within a group. You know, now, does that group sell your data? I don't know. Maybe they do, maybe they don't. Maybe you pay them to make money off of your data. So they're getting money twice. I don't know. That's something you'll have to ask yourself. Are you paying for a group? Is it a Discord? Is it, you know, a trading group? Or, you know, you know, that is on a domain or something that, you know, it's the industry. Let's see here. Pullbacks into 160. See if it holds. Maybe you get the gap fill today. But that's a huge move already, and it's not even been in, it hasn't even been a half hour. So, yeah, I'll be back on to let you guys know if I get in anything. If you guys have questions, post them in the comments below. If you hear any news or anything, or want to talk charts, I don't have any comments in the section that I see. I can refresh, so
Rate cuts are coming down the pike,
you know.
right? I mean, and there's certain things that we know that are very uncertain until 20.
Notice how the volume dropped off there, right? Right at an inflection point. Oh, there's nobody here.
And I think that everyone who has humanity inside him or her and has the ability to have a stage and communicate with people should speak about it. This is a human tragedy that needs to end.
Do not miss this big interview coming up. Squawk on the Street. We'll be right back.
Yo, they do not want any. This is so crazy. I have not. I don't think I've seen anything like this. I really don't. I really don't think I've seen anything like this.
But what if we can make work better? Imagine a workplace where every opinion is an opportunity, every conflict a conversation. The secret to this transformation is HR leaders being catalysts for civility. So join me in starting 1 million civil conversations to shape a better workplace and a better world.
Join the club and start your investing day before the opening bell with specific strategies for members only.
By joining the club, it gave me access to that knowledge from Jim.
That was a huge move there, guys, from 29.50 to 26.
This information that you have is privileged.
DJT might try to turn itself around. Watch your 15-minute chart on DJT. If DJT starts to pull back and hold your hold VWAP, look for bounces off of VWAP and try to regain 9 EMA and fill the gap. Keep an eye on that.
With Floor Concepts, you get our best price guarantee along with fast installation.
They're down on the calls though.
Call us today and we'll bring our fully stocked mobile showroom right to your home.
Oh shit.
Located on
There's a pullback on NVIDIA on the vid.
Network for business. That's why more choose Comcast Business. And now we're introducing Ultimate Speed for Business, our fastest plans yet. We're up to 12 times faster than Verizon, AT&T, and T-Mobile. And existing customers can even get up to triple the speeds at no additional cost. It's Ultimate Speed for ultimate business.
Switch to Comcast Business and get our fastest speed plans yet. Or get started for $59.99 a month. Plus, ask how to get up to an $800 prepaid card. Call today.
Welcome back to Squawk on the Street. Let's get to Eamon Javers with some breaking news today on the Supreme Court. Morning, Eamon.
Good morning, Carl. A big tax ruling here from the Supreme Court this morning. The case is Moore versus the United States. The ruling is 7-2, and the ruling upholds here a section of the 2017 Trump tax law.
Supreme Court rejects challenge to tax on foreign corporate investments. Good. They should not be able to. They should reject that. Like, do you guys see what the fuck is going on? And y'all are okay with this? I don't understand how people are alright with it. I mean, at the end of the day, when the government forces you and cuts out your decision between putting your, putting money back where you need to for your business, whether that's back in the economy, and saying nope, you're not doing that. We're taking it from you. We're forcing you to give it to us. I mean, that's a stronghold. That's your Biden presidency there, right? That's okay. This is why we didn't vote for Hillary. You seen what was going on. Some crazy shit, man. Yesterday, my mom said they're greedy. I'm like you guys had it's just so weird to me to think that like where do they get this picture from? Like, what makes them greedy? They think just because somebody makes a lot of money or has a product that's able to sell around the world and they make a lot of money doing it. You don't see the amount of money that's put out for the research and development of that. Like what that does for other people that work within that company, right? The retirement that it gives them and what it does for people around them. That's all it is. You can't mistake greedy with having a product that's sold around the world, and it's a math game at that point. You have 100 billion people on this planet, and you sell to 100 million of them. $1,000, $800, $500 to, a billion people. What do you get? So. But anyway, good luck today. If I see anything, I'll let you guys know. I'm still keeping my eye on Tesla. I want to see if we can get a bounce back. I feel like it's going to be coming. Just got to be able to take profits on it. Here it goes. I know it, man. It's just so weird that these are not paying, really. That's what I don't like. I don't like that there's just something fishy going on with Tesla. I don't know if you guys see it within the chain or not, but I definitely see it. Let's see what happens right here. Let's go for it. Let's see what happens. It's a break.
Does feel like it's more about prioritizing spending, but if you take a step back on really what's happening, clients are focused on transforming using technology, data, and AI. So a lot of what's driving our sales is getting ready for AI. You have to build a digital core. So we're seeing a lot of modern ERP platforms being put in place because if you can't access your data, you're not going to be able to take advantage of AI. We're seeing a lot of data foundations now. When we do Gen AI, every other Gen AI project comes with it a data project because clients understand.
Look, they're talking about data right now.
And so I would more characterize the focus now on transformation. A lot of data and AI
When we do Gen AI, every other Gen AI project comes with it a data project because clients understand that they've got to be able to access their data. And so I would more characterize the focus now on transformation, using tech data and AI, and eventually then that is going to enable companies who don't yet have that strong digital core to be able to get the value from Gen AI, which is such an exciting technology.
You mentioned your bookings numbers, the milestones they are hitting. In terms of bookings, Gen AI is roughly what percent of your new? 5% or so? I'm wondering what you see in terms of the growth there, in terms of percentage. How much are we going to expect from Accenture in terms of new bookings, specifically for AI?
Well, we continue to expect that Gen AI is going to have a lot of momentum, but of course, it's a small portion today of our bookings if you think about where the spend is. And that's really about where the clients need to spend. So let's give an example. If you think about National Australia Bank, they're leading in the use of Gen AI and doing significant use.
I'm doing it. Doug Trow.
Momentum when it comes to this market?
I mean, I personally relate it to Google. Like, Google probably isn't the best bowling search engine, but it was the first to market and it has never been caught up with, let's be honest. Bing and everything doesn't come close. So this is the new beginning of the new AI space. And yeah, I think that they have such a parlay into that environment. You know, you've got others that are going to try to catch up, but it's going to be really, really hard, Diane. It's going to be a really big challenge. And then you've got companies that are like Tesla saying, oh, we're going to do 10 billion. And then obviously the chips get switched to XAI's platform. And so you've got a lot of Meta, though, spending way more than that. So you've got a lot of companies that are now really starting to focus on their actual R&D spend on AI because they know this is the future.
Yeah, and it's so funny to your point about this is the future. Now, NVIDIA is being, it has to become, if it's not already, a household name.
Oh, yeah.
Because of where it is, how much power it has behind, like it fuels just so many things that people don't even realize. What's the story that we should be paying attention to next when it comes to like NVIDIA or other players in this mega cap tech space?
The AI space, it's going to take, the monetization is going to have to broaden out amongst, the sectors, because we're just focused on the tech now, right now. I saw a little meme video yesterday it said, NVIDIA investors checking their cash position, and it was a guy running with a little, like he had no cash. Did you see that? And then he had two buckets.
Yes.
It's hilarious. By the time he's just falling over with all of his cash. So, they're very cash rich, but the actual application, Diane, is where the monetization is going to come from. So we really have to quickly see personalized benefit from AI, or people are going to say, but what does it do? If it just helps corporations get smarter and enter corporation, we've got NVIDIA's three largest companies, three largest clients are three largest companies in the world, so it's like this is corporate to corporate cash transfers that we're looking at right now, and we need to see broader monetization and bringing it down to the user level, because right now people can't even explain, well, what will AI help me do better?
So obviously we've talked a lot about NVIDIA. It's the clear winner.
Yeah.
What are the other, or who are the other AI winners from your point of view?
I mean, I think you've got Supermicron, computers and SMCI. You've got Dell and other people trying to make partnerships with other chip makers. But it's do they have the processing capacity? It's a multi-algorithmic processing capacity in a chip. It's a supersized chip. So until we see an actual proven market solution to rival it, it's going to be tough for them. That's why they've got such a lead time in the first in class.
And any final thoughts on the mega cap tech sector for the balance of the year? We're halfway through the year. What are you looking for the back half of this year?
The thing is I'm expecting macroeconomic disruption, and because the AI is so new, it's a new frontier, it's not proven enough yet. You will see a retrenchment even with NVIDIA if there's a broad worldwide market meltdown. And that's what I'm worried about. I'm worried about the macro geopolitical things that are happening that could really cause depression in the equity side. And NVIDIA, unfortunately, is going to be affected just like anybody else, maybe to a lesser extent because people will still hold on hope long-term runway, but definitely definitely don't expect, because NVIDIA is so great and has such a lead, that they're going to be able to abstain any global economic conditions, because it's not monetized yet where people will say, I have to have this, I have to have this, I'm going to hold this.
Okay, so the market may be about NVIDIA today, but pay attention to the macro picture.
Absolutely. The macro, I think, is what's going to control the end of 2024. So far, not so much. It's been very kept at bay, but I think we're about to see some big changes before the election, especially.
Okay, before the election, that would be one to pay attention to. Rebecca Walser, always great insight.
Thank you.
Our thanks to Rebecca Walser, President of Walser Wealth Management. Thank you, Rebecca. Coming up, we've got the CEO of water technology company A.O. Smith. He will also join me at the desk as the company celebrates 150 years. They rang the opening bell today. That's coming up next on Morning Trade Live.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
No politics, no noise. From bell to bell and beyond. Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Morning Trade Live. I'm Diane King Hall. Time now to talk A.O. Smith. The water technology company is celebrating its 150-year anniversary. They rang the opening bell on Wall Street today. Joining us now is Kevin Wheeler, Chairman and CEO of A.O. Smith. Kevin, thank you so much for joining us. Talk to us about, you look great for 150 years, by the way.
Thank you.
Say that. All right. So talk to us about this milestone today. You rang the opening bell. What does it mean to you?
Well, for me, I'm just one of 12,000 employees, and there's been many, many people before me that helped this company get to 150 years. So I feel really blessed to be in the spot that I got to come out here and ring the bell and talk about our company and what it means, I think, to the Smith family legacy and how we do business is that we're not afraid to make bold changes when we need to. We have long-term employees, second, third generation employees in our factory, and it just means that we're doing some things the right way, and we have a great bunch of people that really look at our legacy and feel responsible for growing it. And I think we're all terribly excited about being here and being part of it, quite frankly.
So talk to us about the growth of the company. Tell us about some of the capital investments that you all are making to grow the company.
Well, the company transformed about 10 years ago. You go back in our history, we make car frames and silos and things of metal. And over the last 20 years, we transformed into a water technology company. And so we heat water, we treat water across the globe. And so there's a constant investment in technology. We lead with innovation. That's a really important part of it. It's kind of in our legacy, technology and innovation. Each market that we go in, we try to raise the markets up. We don't try to bring them down. And so, and there's a lot of regulatory, and there's just a lot of change coming in business, and we're getting our factories ready for a lot of high efficiency regulatory changes that are coming in the next 2 to 5 years, and just position ourselves for the future. We feel great about water, just to be in that space, being able to heat it, but also be able to clean it.
Yeah, of course, absolutely. Clean water is so important. Let's talk a little bit more about technology. We have this conversation now, and it started last year, about AI. How much is AI involved in the new direction of your company?
For A.O. Smith, I would tell you it's in the early stages.
Okay.
It's in almost every part of our business already. It's just the degree in which you're going to utilize it. So it's in our factories today. It's in all of our administration process, how we look at data. But it's a technology that is evolving very quickly. So we're taking it step by step. It's going to be a meaningful part of our business. It's going to change how we look at our business, how we do business. But we're taking it step by step, and then as things continue to evolve, we'll find the best application. But there's absolutely no doubt AI is going to play a huge role going forward.
For all of us,
Yeah.
I know. I mean, it's rapidly moving for, kind of just any industry that you're in, and you kind of, just have to at least stay informed of it. You talked about some regulatory changes coming down the pike over the next 2 to 5 years. What are the ones that you're preparing for?
It all goes back to decarbonization. And so the U.S. government is going to have some regulatory changes, going to raise the efficiencies of a lot of products.
Okay.
So we're going to, on our commercial product, 100% going to be condensing high efficiency, move to heat pump. And then a little bit further down the road in 2029, we have a residential change coming that's going to also do the same thing with heat pump technology coming in. And these are, we know the technology already today. These are operational changes. How do we build those capacities? How do we do them the right way so we bring the quality products to market? And it's going to be a whole 5-year journey for us to get there.
What's your biggest, like you said, when you're going to bring some new products to market, what's your #1 product now?
Yeah, well, right now we're a high efficiency gas company, condensing type product, but heat pump is really developing fast. Okay, and that really helps with decarbonization, and they're 300 to 400% efficient. And so we spend a lot of time right now building out that product line, make sure that we have the right products not only for today, but as we look down 5 years from now, and not only for new construction, but also for the replacement market. It's got to have value to the consumer to make sure that they're willing to pay for it.
Yeah.
So that technology is maybe our, as we look at it, our primary focus now for several years until we hit 2029.
And then you talked a little bit about decarbonization, and there's been a big push for that, and a lot of companies have to deal with or are trying to reach this net zero goal.
Yeah.
Is that a goal that's on your radar?
We have certainly a goal to reduce our carbon footprint. We've taken a much different approach. We kind of looked at 5 years instead of 50 years, and said we're going to take 10% of it out, and that's where we're moving forward with that. But more importantly, our products last a long time. So every year we sell 3.5 million units residential. We sell 25,000 commercials. We take out 2 to 3 times more carbon than we actually put into those products. So it's a great segue. We're bringing a great product to market. Consumers going to benefit from it, but it also has a much smaller carbon footprint than it did 15, 20 years ago.
And shares of A.O. Smith, I'm looking at in the corner of our screen, they're up a little bit on your milestone day.
Yeah, it's important.
Exactly. That would be good. Exactly.
Yeah, it's important.
You're like, please be up today. So in year over year, they're up 20%.
Yeah.
Talk to us about what investors are gaining as shareholders.
Well, if you look at it, I just talked about decarbonization, but there's some mega trends that are lining up pretty nicely for our company. One's the decarbonization side of it, but also just quality of water. I mean, we treat water all over the world. There's countries that we're in that 2 billion people cannot drink their water. We have infrastructure here in the United States.
Like which countries?
India and China.
Wow.
Yeah, and so, and then you have infrastructures here, like in the U.S., that are 80 years old. So the quality of water, what's in your water, makes a difference in the awareness with consumers, and just in general is a great opportunity for us. We make point of use, point of entry, very efficient to do that, and you can rest every day and rest assured that we're going to have clean water for your family and your children. And then I mentioned India and China. There's still urbanization going on there. There's certainly people moving up in the middle class. We've been in both those countries for over decades, China 25 years. So those, and a really nice balance sheet also helps.
Yeah.
And so you put those together and we can really, I look at our shareholder value and the future looks bright.
All right, Kevin, thank you so much. That was Kevin Wheeler, Chairman and CEO of A.O. Smith, celebrating 150 years. Up next, we've got the Chart Master. We'll talk shoes following analyst calls from Nike and Crocs. That's coming up next on Morning Trade Live. Stick around.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Welcome back to Morning Trade Live. Time now for the Chart Master. Jenny Horn takes us through the fundamentals. Rick Ducat goes through the technicals, and we are talking shoes this morning. Specifically, comfortable shoes. We'll start with Nike. We've got, though, Barclays has it in its crosshairs, cutting the price target there, Jenny.
Yeah, they're not the only ones, Diane. I have to say I saw several price target reductions today, but Barclays lowering its price target to 109 from 114 a share with an overweight rating. And we, of course, still have Nike's upcoming report that is next Thursday after the closing bell. So they, to me, always mark the somewhat tail end of earnings season unofficially. But for the quarter, Barclays does see potential softness in North America direct-to-consumer and slowing overall business in China, as these are likely to weigh on Nike's performance now for the to-be-reported quarter. JP Morgan was another one I also saw trimming its price target to 116 from 122, keeping an overweight rating, while Citigroup and Williams Trading also cut their price targets. Williams Trading is actually the one I saw that maintained a sell rating, so they are the lone sell in this name. Overall, there's 41 analysts that cover this name. 24 still do have buys, 13 holds, 3 underperforms, and 1 sell. The average price target right now is 108 a share. So that does, imply some upside, but it also does illustrate the fact that while these analysts are cutting their price targets today, they're actually still all above the average. So there's some pretty pessimistic analysts on this name here. And I know we're going to compare this name to Crocs, but just for reference, since we've been talking market cap all day, with NVIDIA being, of course, now the most valuable company, Nike's market cap at this point is $144 billion. That makes it roughly 14.5 times the size of Crocs, 4 times that of Lululemon. So I know that we sometimes discount Nike because it's been such a laggard in the overall consumer discretionary space, but it's still definitely influential because it's so much larger than so many of these apparel or retail stocks we look at here, Diane.
Yeah, it is, but it has certainly been a laggard. It's started to recover some ground, but clearly, not everyone is in love with it. But Rick, take us through the chart for Nike and tell us what you're seeing.
Things have changed pretty dramatically for this stock during its last two earnings announcements here. You can see we had a large fall after we hit our yearly highs there near 123, then another rather severe drop to the downside here. Since then, kind of moving sideways here. You could argue that the overall shape has kind of been a lopsided triangle type shape here with a longer trend line in white going across those highs, a shorter trend line going across the lows. And this low point was important because we held the line at our previous 52-week lows right here near 88. So since then, we've made a little bit of progress to the upside, but not really much of a lasting move beyond some of our technical indicators that we follow here. For example, we've got our yellow 21-day and orange 63-day exponential moving averages quite close to each other between like 94 and 95 or so. We've also got this thick red line, our volume profile point of control. That's the area of heaviest trading according to our volume profile study. But within the past few days, price has managed to work its way above all three of these indicators here. You can also see right here with our large green candle, we had a bullish engulfing candle. The large green candle's real body, the distance from the open to the close, completely enveloped the previous day's candle, which was red. So we did get some upside follow through as well. So that's more of a bullish indicator. We've still got an upward sloping trend line on RSI, so momentum still geared toward the upside above the 50 midline as well. For support and resistance, we've still got to break out of this triangle shape here. If we were to move beyond that point, this area right here, this red dashed line represents the pre-gap down low point near 99.76. That would be the mark to beat. We've also got our 252-day EMA just above that. To the downside, it's this green line once again, that double bottoming type area near 89.
All right, that's the chart for Nike. Let's pivot to Crocs. Jenny, I saw Crocs in the store this weekend. I almost bought some. I couldn't bring myself to do it. But there's bullish sentiment around this. B of A out with bullish sentiment on the stock. Take us through it, Jenny.
Gosh, I do feel like I see them everywhere now, Diana. There are shoes that I swear I'll never buy, but the more and more I see them, the more I think that there's some of these actual like types of Crocs that actually look like they're not even Crocs, which is maybe a good thing if you don't want to have, the clogged hole in your shoe type concept that they obviously have marketed quite well. But B of A today raising their price target to 187 from 160 with a buy rating, obviously implying good optimism from where we're currently trading at around 162 a share. They do see potential near-term catalysts in the form of stronger than expected international results, and said that valuation remains attractive given expectations for the company to deliver consistent mid-single-digit sales growth at around 25+% of their operating margins. Now, I have to say, to speak to that valuation, this stock does trade at a forward PE of just over 12 times, so well below the footwear industry's 27 times and the consumer discretionary's 32 times roughly on a forward-looking basis, of course. And this name very much loved by those that cover it. There are 14 analysts, 10 buys, 4 holds, not a single underperform or sell that I could see as far as this name is concerned, and did touch a new 52-week high earlier today. Not an all-time high. We're still about 11% off of the all-time high at around $183 a share, but hey, it's been a really strong player this year. I feel like specifically footwear stocks have been so resilient in the retail space because we are still up, at this point, considerably on the year and considerably over the last 12 months even.
Yeah, I've been surprised to see still the stronghold that Crocs has on people, even in a post-pandemic world. All right, you're going to have to excuse this pun. Jenny started it. She mentioned holes. Rick, are there any holes in the chart?
Well, actually, the chart looks pretty good still. We can see if we take a look here, we hit some lows near 74 here on earnings back in October, but we're up about 120% from this point. Recent price action has been an upward channel here. We drew a trend line going across the lows, duplicated it, matches up pretty well with the highs. So now we are finding ourselves making new highs today. Even though we have retreated back a little bit from that point, we're still up about 1.92% or so on the day. We can see RSI as well has made some nice progress to the upside. We've retaken that 50 midline. We had a couple of movements above that overbought area. We are coming close to moving into that area again, that threshold of 70 here. Tiny bit of bearish divergence here in that the RSI is making a lower high as price is making a higher high, but we'll see if that resolves itself as this day goes on. So now it's a little bit tricky to assess where we might find some resistance here. We can use our standard deviation channels, 2 standard deviations up from our blue linear regression line. That comes in right around 177, so that could be a place to watch for potential resistance if we break out of our channel. To the downside, we had a small gap that coincided with some lows after the gap formed near 155. We've also got our +1 standard deviation channel near about 156.40.
All right, 156.40. Rick Duquette, the Duke of Data, and our very own Jenny Horn. Thank you, guys. Time now for a developing story. For that, we want to bring in Renita Young. We're going to talk Enphase Energy. The stock is under pressure this morning. What's going on here, Renita?
Well, it's under pressure with its peers in the solar space because JP Morgan took out the scissors and they're cutting price targets on a couple of solar stocks. It's all because of the weak demand for solar happening in Europe, and it's coming out of a conference that's happening today, the first day of the Intersolar Europe. That's the firm's energy conference. But JP Morgan cut Enphase Energy to $124 from $128, maintained it at an overweight rating, and also cut the price target for SolarEdge to $59 from $73, saying that the residential solar demand in particular remains moribund, just really dead and flat. And this analyst still sees some elevated channel inventories and then low power pricing, plus that near-term uncertainty related to elections. Now, the last company I'll talk about went a little bit deeper into the elections conversation. German solar company SMA Solar cut its sales and earnings guidance for the fiscal year 2024 for the same reason, the persistently volatile market, in addition to the delayed increase of incoming orders that is all resulting from the high continued inventories at distributors and installers. They also say that this new uncertainty in the market due to the recent outcome of the European elections and the upcoming elections in the United States that'll be in November, that's also driving them to lower their targets for the stock, which also drove JP Morgan to cut its price targets for a couple of solar stocks today, Diane.
Enphase Energy dropping after that price target cut by JP Morgan Chase, down more than 5%. Thank you, Renita. Time now for our market meetup panel. I've got the Kevins with me. Kevin Green, senior markets correspondent, and Kevin Hinks, co-host of Fast Market. Thank you guys both for helping us kind of put a bow on these first, we're not quite at 2 hours of trading yet, but almost there. All right, so earlier we had the S&P 500 cross 5,500. Not there right now at the moment. It's hard for me to see from here. Let's start with you, KG. What do you make of that level?
Yeah, I mean, it's a really big level for us to be able to break through. Now, we did actually exceed it. We went to 55.05 and then sold kind of back off there. And that's probably based on some of the comments that we got from Janet Yellen as well. Some of that commentary might have spooked the markets a little bit, but we are for the most part range bound. But when you're looking at the performance here today, when you have utilities and energy kind of outperforming, kind of once again seeing this rotational type of trade taking place here. And for the most part, we don't have any more economic data that's coming on the calendar today. We do have a Fed speaker that could kind of maybe provide a little bit of volatility, but overall we're holding in here, having compressed volatility in a light volume market. It still is favorable for the bulls, and we just might be in a range for today.
And then Kevin Hinks, let's turn it over to you, because I've got to say, like, both of you guys' last names now, because it's the Kevins. I feel like it's a band. What's your takeaway from this market today? Is this all about micro?
Well, it's interesting. Today, we're up in 3 of the 4 indices, but without the NASDAQ. So we're losing the NASDAQ today as the leader, yet stocks still stay up. With the NASDAQ down, with the dollar up, with yields up, and the S&P still up. Now, it's not up a lot. It's up less than 1/10%. But it's still up on the day and firm with all those macros, and NVIDIA kind of working, well, NVIDIA's up, but the NASDAQ itself, that composite is down. So kind of an interesting day where some of the forces may look to weaken this market over the day. It'll be interesting to see if this market stays positive all day with the NASDAQ down, dollar up, and yields up. And by the way, crude oil up. So there's a lot of things working against this market right now, but it's not NVIDIA.
Okay, Kevin, you teed this up for me. KG, can NVIDIA do no wrong?
It seems like that right now. It's actually very interesting. I just got off of a conversation with Matthew Tuttle from Tuttle Capital Management. He has this 2 times levered to the upside ETF for NVIDIA, as well as he has a short 2 times levered ETF. And I kind of asked him the question just broadly, do you find it difficult in these uptrending markets for stocks like NVIDIA when you have these 2x levered ETFs, or even just to the downside? And he actually kind of made a mention here that it is actually becoming a little bit more difficult for their dealers or their counterparties to actually do long deals right now because their desks are already so concentrated when it comes to NVIDIA. And that's going to be, it has been a little bit of a challenge for them. I thought that was actually remarkable, to say the least. It's not just the retail traders that are out there. It's those that are actually making markets and swap markets and derivatives markets that they're kind of hitting their limits. And the dealers are saying, look, we have already way too much. That's how much enthusiasm is in this name. If it were to unwind, though, I think that would be actually a very interesting scenario here for the broader market, just because of the overexposure that we have and the concentration risk that we have for an NVIDIA. Right now, it cannot do any wrong at this point in time, but, tides can shift, and they usually shift fairly quickly.
Okay, and Kevin Hinks, let me send it back to you for your final thoughts.
The open interest. Think about this, Diane and Kevin. The 140 strike, that is the June expiration tomorrow, has 143,000 calls as of this morning, which means if NVIDIA finishes through $140, it's 14.3 million shares that go from out of the money to in the money. There's massive options open interest going into tomorrow. It should be pretty interesting, actually.
So some potential volatility tomorrow as we close out this holiday shortened week. Thank you guys both. Thank you, Kevin Hinks and Kevin Green. And thank you all for joining us this morning on Morning Trade Live. I'm Diane King Hall. You'll want to stay with us here on Schwab Network. Trading 360 with Nicole Petalides is coming up next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. So she had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. Trade brilliantly with Schwab.
Good Thursday morning. We're 90 minutes into the trading day. Welcome to Trading 360. It's a record day here. Again, I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you're with us. Today's show, our 360 Spotlight, will welcome the president and CEO of American Superconductor. After the company has seen its share price soar this year, and we'll discuss its plan to keep positive momentum going. The disruptor, Taiwan Semi, after receiving a price target hike over at Bernstein. And in our 360 round, we'll break down the earnings report from Kroger, which was released this morning. In the meantime, S&P new high, NASDAQ new high. So take a look. S&P right now, 54.97. It's up about 10 points. NASDAQ's up 24 points at 19,933. I was looking at the NASDAQ 100 when I noted the new high. The Dow is up 0.2%. The Russell's gaining about the same amount. Oil and gold both higher, 23.77, and oil looking for the second week of gains, 82.21 right now, gaining more than 60 cents. And the VIX is at 1289. Bitcoin 65,020, 105.11 for the dollar. Look at top moving stocks in today's market. I'm joined by Jenny Horn, markets correspondent here on Schwab Network. Of course, NVIDIA records again. Tell us what you're watching there.
I know, it's frankly amazing, Nicole, that NVIDIA in the last week or so, we've seen it add, I mean, now its market cap is a combined worth over the size of the entire UK equity market just over the last week. And I mean, if you look at its market cap right now, of course, it did take the throne for Microsoft as being the most valuable company in the world. It's now valued at around $3.42 trillion in real time, with our near 3% move to the upside today. It is, of course, it's seen its market cap increase by the value of Amazon in the last 6 months and Berkshire Hathaway in just a matter of 6 weeks. And despite this unprecedented rally and continual rip to the upside, analysts are still pretty upbeat, as Stifel did update its price target to $165 a share from $114. That implies 22% upside from where we closed on Tuesday. The analyst added that the new price target was also based on the earnings estimates now that they've revised the upside for fiscal 2027. But they mentioned that NVIDIA's leading position in high-yield markets is a major catalyst, as long as a longer-term opportunity that could funnel its approach of $1 trillion. They said that the majority of near to midterm opportunities will come from some of these high-performance computing, hyperscale, and cloud data center segments, as well as enterprise and edge computing. And they do believe that the overall shift from general purpose compute to accelerated compute represents the company's now most significant revenue profitability opportunity over the next several years. They were not the only ones, though. I also did see Tigris raise their price target to $170, so even more optimistic, from $98.50 a share with a buy rating. And amazingly enough, Rosenblatt was one actually from earlier this week that raised its price target to $200 a share. So just to illustrate, we're at $3.42 trillion right now. If we were to reach $200 a share, its valuation would be upwards of around $4.9 trillion. And I know that there's actually a more optimistic price targets out there that have the company valued at well over $5 trillion. So it's been a very fun stock to watch. I'd say it's been the story of the year, no doubt about it. But at this point, even though we've risen so substantially, and this is the most valuable company in the world, its valuation is just over 45 times on a forward PE basis. So the argument is still being made that it's actually pretty, at this point, relatively inexpensive, or maybe just fair valued based on its valuation, even with this monstrous move to the upside.
All right. Thank you for that, Jenny Horn. It's exciting to watch, no doubt. Appreciate it. Can't fight that AI train, said one of the analysts. In the meantime, let's get some insights on the news shaping the markets. And for that, we welcome in Ryan Dykman's with us, Chief Investment Officer at Dunham Associates Investment Counsel. Thanks for being here. Another record. Are you surprised to see the record? Are you expecting more records throughout the back half of 2024?
Well, I think you're right, Nicole. I think there's a lot of upward momentum. I like the AI train comment, because without that, I don't think you would have seen these higher highs being met. But with that, my biggest concern is I don't think there's as much risk being priced into what you're seeing today. I think it's being very much undervalued and underappreciated how much risk is still out there. So I don't want to be the bear out there saying, hey, I'm calling for a giant drop. But I do think the rockiness that we've been seeing, and you mentioned the VIX earlier, around 1290, kind of hovering there, it's still very low on historical standards. So I think that we're going to see, again, a little spike in the VIX, a little more volatility. It's not going to be fun as we're at these high highs. I think it's going to bounce around a bit more.
So with that, are you expecting, as you said, you're expecting some volatility. If there's a pullback, would you say that would be a huge buying opportunity in your mind, or would that, because you said there is risk to the market, I mean, don't ignore any risks. What is the risk, and if there is a pullback, would you buy more?
Yes, so it's going to be in certain areas. So the breadth of this rally, as we've seen, is kind of concentrated at the top. And so as those risks come to fruition and we start to see that volatility, the biggest areas that we've seen opportunities tend to be in your small caps, on the value side. So we get very excited about that. We did add a little more there recently on my own allocations that we do at Dunham. So we would add to, I would say, more aggressively than, say, more large cap growth. That would be an area that, as it kind of gets a little cheaper, we're watching what else got much more cheaper than that in those volatile times. So looking at small caps, particularly on the value side, I think that's an area that we're still very excited about.
Right, understood. I mean, when it comes to the AI train, you said you liked the comment from the analysts. A name like NVIDIA and all the other names in the world of semis and tech, do you like that group?
Yeah, actually, more than that, I like the trickle down, right? I like where this is going to end up. So while right now it's all the headline names that kind of, they're making the chips or they have the technology that's on the forefront, it's the benefactors of that down the road that I'm actually most excited about. So again, I know value is like that unloved asset class for so long now. Growth's rallied for the last, we'll call it 14 years for sake of argument, but it's one of those spots that I think those companies, kind of like we saw during the initial parts of COVID, where there's that adaptation. I think as they implement a lot of these AI technology, I think they can unlock a lot of value. And we were talking about 45 PE, I heard the analyst mention. As I think of something like that on the value side, which is, a fraction of that amount, you imagine the amount of extra price growth that you can get as those companies on the value side start to realize those benefits of AI, and as that technology comes down to them and helps them to make more efficiencies.
Yeah, understood. I mean, when you think about the Fed, I know the credibility of the Fed's on the line, and Yellen out there telling Powell, do your job. And what do you think the Fed should do, and what do you think the Fed will do?
Sure. So the Fed, it's kind of funny because I think Yellen's one of those who was really good about broadcasting her moves in advance when she was the Fed chair. I think she did a good job of that when she was speaking, out to the public and basically doing those, finance committee depositions. The issue that I run into, though, is that Powell has changed his stance multiple times, and so I don't know if the market believes him near as much. So when he said, originally we were talking about 3 or 4 cuts this year, now it's down to maybe 1, and then next year moves forward, we get, I think, 4 instead of 3. As we look at things like that, the bond markets, I don't think they're going to believe him quite as much. Now we're starting to see, okay, we'll see what we can get. And I do think there's going to be volatility on the bond side because of this uncertainty that's in there. I also think that with the election coming up, you kind of have people who are going to be a little scared. Where do I put my money when I'm worried about what equities are going to do and what bonds are going to do? So if that starts to come up, we start to see that volatility equity side and bond side pick up, I get a little concerned for those investors that are seeking shelter.
What kind of names do you like when you say growth versus value? Maybe you can't name specific names, but give us some ideas whether it's a type of stock, growth versus value, or a certain sector. What's your investment strategy? How do you put a portfolio together here in this environment for the next 6 months, for the next 6 years?
So the next 6 months and 6 years for me actually look kind of similar. We tend to look a little longer out when on the equity side. So for me, the value side, it's going to be an overweight for me versus the S&P 500. If you kind of cut it value and growth, it's going to lean growth. I lean value. Also on the foreign side, I do consider a lot of foreign stocks. So we actually have a much more equal weighting with like the AAPL. So where the All Country World Index might have more like a 60-40 breakdown. The average investor out there has far less than 40% in foreign stocks. That's another area that tends to be more value-y versus the United States. And we have a lot of value names on that side too. So we have been leaning value across the portfolio. And we also like alternatives a lot. So things that can take advantage of some of these shorter term disruptions, I give that to the hands of an outside money manager, because that's what we do here. And so I would use them to kind of help navigate the more short term tactical stuff.
Yeah, gold has gained over the past week. Oil's running two-week gains. Do you like commodities? Is there any commodity in particular that you like to dabble in?
And so the answer is no, is the short answer. And one of the biggest reasons I get a little worried about it is when my mother-in-law and father-in-law start to talk to me about how they're buying into these, commodity structured things. I get a little nervous because once your retail investors start to get too involved, we saw this before at other peaks, I get a little nervous that we're getting higher highs that may not be sustainable. And you could see some, hiccups, especially on the gold and oil sides.
Right. Ryan, great to see you. Ryan Dykman, Dunham Associates Investment Counsel. Thanks for being here, Ryan. Coming up next, plenty more here on Trading 360. Up next, the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. Alan Nuckman will take us through the trades for Etsy, CRISPR, and Van Eck Gold Miners ETF. Right here on Trading 360, Schwab Network. The Dow's up 75. We'll be right back.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, bullseyeoption.com. All right, so it's Thursday. We had a day off yesterday. We closed at a record. We opened at a record. Alan, tell me some of your thoughts here today.
No thoughts, nothing new here. You know, we're in a momentum market, and it's just our job to try and find the pockets that really haven't participated yet. Like your last guest was saying, you know, you can't fight the power, but you've got to be smart from risk reward, and that's the important part of trading.
Yeah, all right. So find the pockets that haven't participated yet. And where does Etsy fit into this?
Well, first of all, we can't even let Ben critique this chart because I'll tell you right now it's a bad chart. But it meets my criteria for everything. I'll get into that in a second. But the reason I came across this, I was on Etsy's website. I needed a Chicago flag here to fly at my house because the wind had damaged the one so badly that I needed a replacement. I needed one that was industrial strength. So the only place I could find that was Etsy. Now, Etsy does not have a flag pattern on its charts. It's been pretty much straight down, but it does have bullish divergence. That's what I look for. I know I mention it every week to you guys. When I see a stock make new lows but not new highs, implied volatility, that's a sign of a sentiment shift. And you can see that by not looking at the price chart. Look at the volatility chart. Volatility right now is at 30, where it was at 60 at its highs. So what that's saying is the stock sentiment, the scaredness of that stock is not there anymore. And even though it continues to drift and make lows, that volatility is declining, whereas you would think a stock that's selling off, the volatility would be increasing. What I see is money flow. I see long leverage accumulation, and I see this bullish divergence. It's 40% off its July 2023 high, so just a year ago is 40% higher, and it's 80% off its 2021 top. So a combination of these things, limited risk. I'm looking at a September 50 call. It's trading around 10 right now. That's deep in the money. It's got 3 months of time, and you want to be in position for success. This is the exact same bullish divergence that we saw in a bottom in Apple, and that's a great example of a sentiment shift in psychology.
All right. So we won't even let Ben look at the chart on this one. We're kidding, Ben, but we don't want to, we got to not run out of time. So CRISPR, Alan asked me, tell me about CRISPR.
All right, so CRISPR has changed the tone. It's, again, the same kind of price stock. It's sitting at about the $58 level. I'm looking at a 50 call there. That's trading for about 11. It's at a discount. It's down 35%. It's been between 50 and 90 for 8 months. It broke out here recently, but it's come back to the breakout point. So that's giving us a second chance. I see money flow in this stock, and it's got a 70 midpoint target to keep an eye on here. It's about it is 60% off its 2023 low, but again, down 70% from its 2021 top. So risk reward is on the side, leaning on that support level at 50.
All right, let's bring Ben in to take a look. He said that the first one was probably a bad chart, and you probably wouldn't like it anyway, Ben. How about CRISPR?
This one's not much better. I hate to say it, Nicole and Alan. Trend lower here across multiple time frames. It could turn around, but at this point, it's just a guess. We like to look for trend because that's the way value is moving. The expectations that that's going to continue. It will at some point turn around, but when ultimately is, again, at this point, a bit of a guessing game. Let's just start off with the 5-minute candle chart. Some of the weakness we've seen as of recent, the selling that's been coming into play. Just off the highs from the end of last week, stock was trading up around $67, $68, and you can see some price decay that's ensued since, down to around 58, we'll call it, 59, currently trading around. So about $10 to the downside. I went ahead and identified some areas of consolidation on this 5-minute candle chart where the market's paused. You can see 4 of them We're currently in this range around the $59 level as long as we hold below 62. Still a very bearish pattern here right now because value is moving lower, so trend is moving lower. Now, it's not just the 5-minute candle chart here, Nicole. Let's take a step back away from the price activity off the highs from last week and just take a look at some of the price activity we've seen off the highs from, well, take a look here. This is going back to February of this year. You can see we were all the way up around $91, and you can also see 3 areas where the market paused and kind of went into this sideways consolidation: 84, 73, and then again a very wide range trade around the $60 level is kind of the way I'm looking at it. We're also building momentum through this area here right now, which targets this lower level, $50. Taking a step back away from this hourly candle chart, similar pattern. I told you this was not a good-looking chart by any means. Take a look. We're going all the way back to the highs we saw. We were up around 220, if you remember, back in the beginning of 2021, end of 2020, and a similar pattern. Again, almost like an L shape that repeats itself multiple times here, kind of like a hockey stick type pattern. And yeah, simply put, not what the bulls are looking for. This, again, is what has me most concerned. We're balancing around 70. Look at this test right here. If this fails and we work our way lower, sights are set right on that $37 level.
Okay. Any thoughts on that one, Alan? You want to expand at all?
Yeah, we came right back to the breakout. Markets and breakouts act as support. So that's what I'm leaning on here. We had traded sideways, had a 20% rally off that breakout. Now we come right back down. So this is the level to lean on. I'm in a bull market. I am in a bull market, and this is a stock that hasn't participated. I've got limited risk. I got 3 months of time. I'm in the money. It's about the math. A modest move, and it's produced big gains in this option. There are 2 ways to trade. You can get in after the move has happened, and now you're trading with the stronger trend, or you could anticipate that breakout with a limited risk positioning for success is the way I like to trade.
Okay, I like that. All right, affirmations there. That's how you trade, and you say it every morning. Let's get to VanEck Gold Miners ETF. We've seen gold doing well this week. Right now, 23.69 a troy ounce. Some thoughts here on the ETF?
Well, we're both going to like this chart, okay? It's pulled back. We're about 10 to 15% off the recent highs. Gold tested and rejected that 2,300 level. If you look at the commodity itself, 2,300 to 2,450 has been the range now for a couple months. That's come back to the breakout point that acted as a solid support. It tested, rejected, and it bounced. You've seen more so even in silver, which is a very similar chart as well. GDX is the miners. Now, the miners had a delayed reaction to gold here in the last year. They finally made new highs here recently. Now they've had a profit-taking pullback. We're using this as a second chance. We're 10% off that May top. We're breaking a 15-year downtrend, and the high back in 2011 was at 67. We're sitting around, 34 right now. So what I'm looking at is a triple bottom. We've been trading between 25 and 35. That target's 45. And so we still have more upside here. The January 30 call, which is the midpoint of that range, it's trading for about 6. It's got 7 months of time. And it's only $75 more expensive than the September option for twice as much time. So again, deep in the money, a lot of upside. We're talking gold, gold, gold. And I love the way this is set up and breaking an overall, 15-year downtrend. So that's a positive.
All right, so we're both going to like the chart, he says. Ben?
I agree with Alan on this one. Oh, it pains me to say that so much, Nicole, but yeah, it is to the upside here across multiple time frames. We are seeing a bullish pattern play out here, so we are in agreement on this one. Let's take a look first and foremost at a 5-minute candle, bottom left, top right. So no argument here. You've got value, which has been moving higher. This stock, if you remember, was trading around 32.84 just earlier this week, and we've seen quite the move up here. So we've actually gone into a bit of a vertical phase here recently after balancing around this 34.10 level. The one thing I also notice is take a look here. Every 50 cents up, we're finding value, right? So at this point, the bulls are kind of looking for, what would it be, around 34.60, basically, for value to form, right? That staircase type pattern to continue to play out. Again, continuation, more likely than change. Trend is your friend, a couple different ways of saying it. But if we do establish balance up here and get a little bit more overlapping and rotational relative to this high conviction trade, then this will be the level that we're looking at. 34.10 will be the area that the bulls don't want to see us below. That's a 5-minute candle chart. tough to trade that more intraday time frame. Taking a step back, though, I did mention that this pattern was playing out across multiple time frames. Here we've got an hourly vantage point queued up from when the stock was trading around 25, 26 back in the middle of February, all the way up to 38, well, just shy of. Now take a look again. Remember we were just talking about our last example and how as you fail at the middle of that balance area, you open up a door for a retest of the lower extreme. That opposite plays out here. We are now moving our way through the middle of this balance area after a failed attempt at the lower extreme. 29's a line in the sand. And energy through the middle here, what does it do? Opens up a retest for 37.57, those highs that we saw. When was that? Back in May last month. One more step back. GDX, you can see on a well-defined trend on a 5, on an hourly we've looked at. Now we've got a weekly candle chart. You can see a similar pattern. Areas of value forming at higher and higher levels. Not as easily identifiable, but bottom left, top right, simply put. Hold this level around 22 again. Opens up a door for a retest. These are just different time frames, different levels to watch according to those time frames, but across the spectrum, you're going to see a bullish pattern playing out here.
All right. I'll give you the last word there, Alan.
Go, go, gold. That's really all I can say here. Go, go, gold.
Great to see you both. Thank you. Alan Nuckman, Ben Lichtenstein with the big three today, looking at Etsy, CRISPR, and the GDX. Thank you. Coming up next, we're spotlighting American Superconductor. The president, CEO, joining us to discuss what it's seen this year, how the company plans to build off the positives that it has seen as well. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. All so you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We want to spotlight American Superconductor. Joining me right now, Daniel McGann's with us, President, CEO, Chairman, American Superconductor. Thank you so much for being with us. We think about power solutions and wind and everything on the grid. Tell me a little bit about the latest and what the company's been working on.
Yeah, we're at the center of all that right now. There's a lot of tailwinds that we're starting to experience in the business. We're about grid resiliency. We're about bringing more renewables onto the grid. We're also about working with large industrial companies now, which is a new part of our business, to be able to make sure they have reliable power for their capacity to be able to make products. And that could be from semiconductor to materials processing we think about the energy future, it's going to require a lot of materials, and we feel like we're at the center of that.
And it's interesting because everybody keeps talking about, first it was EVs and where are we going to plug all these EVs in? Now it's all about AI and data centers and power and all that. I mean, that must be a conversation that you're having, right?
Yeah, that's a deep conversation that we're having with multiple customers. What the grid's going to have to do in the future is something it's never been asked to do before. It becomes the lifeblood of everything we do. It has been that way for a period of time, but it's just going to get deeper and broader. And what we just felt is that we're in a nice situation right now. We've experienced some nice growth. We hope that that can continue with these tailwinds that are at our back right now in the business in multiple fronts, from renewables to materials to semiconductor, and even our military business is starting to grow.
And your systems are protecting and helping the Navy's fleet, right? Tell me a little bit about that and that kind of contract, and do you expect that partnership to be renewed? And if so, when? What's the outlook with that?
We have a long history with the U.S. Navy. We developed what is what we call a ship protection system. It's basically noise-canceling headphones for the ship. It takes the signature away that minefields would see. We've been able to now deliver that into the fleet. We have 5 contracts with the U.S. Navy for that product. We have a new product called a mine countermeasure device that the U.S. Navy has funded, and hopefully that will go into production. And we just announced about a week or so ago a major order with the Canadian Navy, the Royal Canadian Navy, where they want to take our technology now and also put that on multiple ships. So we see this business starting to expand. It's something we've been working on for a number of years, and we're now starting to see that work come to fruition.
Wow, congratulations. I mean, isn't that nice for you? You've been working on it for a few years. You've had the U.S. Navy that you've been working with, and now you have the Royal Canadian Navy saying, we would like to work with American Superconductor as well. Tell me a little bit about that deal. Does it help the bottom line? Does it give you more exposure? What do you expect from this deal?
So if you think about the most recent financials, we just started to break through with reporting non-GAAP net income and positive cash. We did that for last year. That's the first time in a long time we've been able to do that as we've rebuilt this business. But going forward, we think that this Canadian order, presents about a $75 million contracted opportunity for us to do engineering plus multiple ships. It should help transition that part of our business to start to generate margins similar to the rest of the business, which certainly will help the bottom line pretty dramatically.
That's pretty exciting. When will we see that take place? Will that be in the back half of this year or next year?
The ramp for Canada, that's going to start probably next year in 2025. And that will be a persistent level of revenue that we'll be able to deliver multiple ships at. And we already have the 2 U.S. platforms that have ramped up a bit. So we're seeing probably, let's say, over the next 4-6 quarters, we'll see a ramp of revenue for our ship protection business. And then, we'll hopefully we can continue to add to that backlog. With the U.S. Navy, we've generated more than $50-60 million of hardware business to be able to insert in the fleet. We've done tens of millions of dollars of development. The real sea change here is we're doing production units now to be inserted into the fleet for the U.S. Navy. And then hopefully, I think our first ship system is due for the Royal Canadian Navy in 2026.
And some deals in the world of wind as a power, Inox Wind. Tell me a little bit some of those orders and what that means for the company. Maybe an explanation for folks who don't necessarily understand this type of power as well.
Yeah, the past year we've seen a pivot more towards our larger turbine with our Indian partner, Inox Wind. They're launching a 3 megawatt wind turbine that uses our control systems. We got our first small production orders last year. Their backlog has doubled nicely over the past couple of years here, and it's going into a business in India that's projected to double again. So we think that we're in a position where we're really literally going to have the wind at our back in India and help drive additional growth in the business.
Yeah, I see MKM, Roth MKM maintaining a buy rating. They raised the target price to $27. You're at $24.80 today, up from $20. So you're getting some positive comments from the analysts. I mean, what do you tell them on the calls when they ask about some of the headwinds, let's say, for your kind of company, and how do you tackle those headwinds?
Yeah, I think all of our analysts just raised all their targets for us. We've had a business that had experienced some headwinds in our past. I think that's behind us, at least for the immediate future. It seems like, all four pieces that move our business are moving us in a very positive direction, and we're very poised for growth. I don't really have a negative thing to tell you today. I wish I could create one. I want to knock on wood and say, things are very good now, and we think that they're only going to get better here in the relatively near term even.
Yeah, I see. By the way, I see Oppenheimer, Craig Hallam. They raised. I see a buy ratings, but their targets are $23, which is lower than the current stock price. And
I think one of them just raised it
seems...
from 23 to 33. I think that just came out recently.
All right, so you'll take that, right? You'll take that. Tell me a little bit. When you mentioned the headwinds, you said, well, the four things that could be the headwinds all seem to be in line. And yeah, I don't want you to create any negativity and put that in the. Yeah, good. I don't want you to create negativity and put that in the universe. I like that things are going your way. What are the four things that could be the headwinds that are now in line with what you're hoping for the next year or so?
I literally don't see any headwinds. I don't know if you're confusing tailwinds and headwinds, because we've had an economy that has seen a lot of headwinds. Our business sees a lot of tailwinds. We see a lot of positives in renewables, in materials, in semiconductors, as well as the military. Everything is very well positioned for us right now that we should benefit nicely from the macro events that move our business.
And what about the global footprint? I mean, you mentioned the work you're doing in Canada. Where do we stand globally with this company?
Yeah, we do about 3/4 of our business in North America. Obviously, we're going to see some expansion with Canada there. The other quarter of the business we do globally. Probably about 10% of our business has been in India. Hopefully that will continue to grow in the future. So we were, a number of years ago, we were more of a diversified geography. We've kind of went back home and built our U.S. market, and now we're starting to see expansion globally coming for us for all our products, which is another potential tailwind for us as well.
Yeah. Daniel McGahn, thank you so much, CEO at American Superconductor.
Thanks
very much. It's great to see you. Appreciate it. Coming up next, the disruptors. George Silas is standing by, and he'll join us to discuss Taiwan Semi after receiving a bullish note from Bernstein. Stay with us.
cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. A look at developing stories, and I'd like to bring in Kevin Hanks, host of Fast Market here on Schwab Network. And we're looking at Darden. All right, it's almost lunchtime. Let's talk about the latest earnings report. A lot of names under this umbrella. Some of your thoughts.
Yeah, if you think of the name Darden Restaurants, you may not know what that is, but if you think of Olive Garden, if you think of Capitol Grill, if you think of Seasons 52 and Longhorn Steakhouse, you start to get a picture for what this company is, Nicole. And they had earnings yesterday. Here's the numbers. Earnings $2.65 versus $2.62 expected. Revenues $2.95 billion versus $2.98 expected. A little light on the revenue side, but this stock had sold off recently, down from $176 high down to in the mid 140s. So a nice little recovery here. The stock's up 2.2%, about $3.50 back to $155. So the guidance was for same-store sales about 1 to 2%. 45 to 50 new openings in the next year. So this company's still growing. They increased the dividend. They have $900 million left on their repurchase program. And it's interesting. It's Longhorn Steakhouse that's really carrying the weight here. Olive Garden's numbers were down 1.5%. That's 50% of their sales, but Longhorn Steakhouse was the clear leader, up 4%. So even though a lot of these restaurants were flat to a little lower, it's, of all things, Longhorn Steakhouse that's really carrying Darden Restaurants right now, Nicole.
Yeah, the profit beat overshadowed the muted outlook. To your point, it was interesting how I saw a lowered price target from Piper Sandler. So Darden's trading at $155 today, and Piper Sandler cut their price target to $163 from $167. So they dropped it a couple of bucks. I saw that from this morning. Stevens & Company reiterated with a $165 target. Thank you. Well, good luck there at Darden today, Kevin Hanks. Appreciate it. Now let's look at the disruptors. George Sillis is with us, senior markets correspondent here, and taking a look at Taiwan Semi. Tell me a little bit as you're looking at this name.
Well, obviously, this is a great performer this last year, Nicole, alongside a lot of the artificial intelligence and semiconductor names out there. I mean, Taiwan Semiconductor essentially produces more than 60% of total semiconductors globally. So it's a globally systemically important company. And it's a company that's starting to lessen its exposure to China. In fact, if you look at some of these sales in the greater China region, they were about 15% last year, and they're actually below 10% now. And North America really represents the greatest composition of sales for Taiwan Semiconductor. So I think this is a company that's becoming well positioned globally in terms of its geographic locations. They've expanded production in the United States and, of course, in Canada. And essentially, they're becoming closer or getting closer towards their end markets. And it's a good strategy the company's taking on to mitigate some of the risks associated with production in Taiwan because of the China encroachment there. But nonetheless, the company's profitability has been increasing in the double-digit range from an earnings standpoint and even sales. And the analysts are still constructively bullish. If you look at the couple of names today, like Bernstein, they increased their target quite a bit from 150 to 200. They maintain an outperform rating. And if you look at Goldman Sachs as well, they increased their target to $218 from 183. So I think this is a name that's giving you, or any investor who's got stock in this name, exposure to artificial intelligence and the secular growths that we've seen. And it's not just, NVIDIA. We've talked about the periphery names out there, whether it's semiconductor systems and networking like Broadcom, Micron Technologies, essentially in the high bandwidth memory. But Taiwan Semiconductor is essentially ubiquitous. They produce and manufacture semiconductors across multiple technologies. It's not just artificial intelligence, it's mobile, it's desktop. It's also, again, in the industrial space as well as data center and server markets, which we know, looking at Dell and Hewlett-Packard Enterprises, for instance, have been really high as of late.
Yeah, and I'd love to hear an example trade today, George. Do you have one for us?
Yeah, so, it's interesting what's going on. There's a lot of rotation within the semiconductor space. I mean, for instance, AMD is higher today by, 7 or 8%, and it's been an underperformer. And so you're seeing some of the outperformers sell off. Some of the underperformers catching a bid is algorithmic or hedge fund traders are switching positions. So looking at Taiwan, I mean, it's obviously down today slightly, but, it's still holding its 10-week moving average. So it could pull back to that level. And so, with that said, I'm not going to chase this one. And so I'm going to structure a bullish trade, but a bullish trade that allows the flexibility of a pullback just in case it happens. So I'm going to go up to July, and I'm going to sell the 170 put. That's below the current price. And then I'm going to buy the 160 put below that. So this is basically selling a put spread. And you can actually structure this two-legged trade for $3 of credit per share or $300 a contract. So the stock essentially just needs to, stay above the 170. We'll achieve the max profit of $3 a share. But if it does pull back below that, your break even is 167, and your max loss is 7. And that'll only happen if the stock reaches 160 or lower by expiration. So this is a narrow trade in terms of time. You got 28 days, and it allows flexibility because there's a lot of chasing going on in the AI space, and I'm not in the business of doing that right now, especially with some of the gains we've seen over the past 6 months.
All right. Thank you so much. Good to see you, George Sellis. Appreciate it. Coming up next, it's time for our 360-pound round, and we're taking a look at Kroger, and it's on the move right now to the downside, 2.4%. What do we need to know on the quarterly numbers and the outlook? We'll be right back.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for the 360 round, and we want to bring in our panel and take a look here at Kroger, which really has jumped in the last 6 months. It's up about 11%. Came out with its quarterly reports and flat earnings, pushing sales higher. Arun Sundaram is with us, equity research analyst at CFRA Research. Jason Greer is with us, founder CEO at Greer Consulting. Thank you both for being here. Jason, I mean, you talked about sort of the ups and downs and some of the headwinds this kind of company faces, but the first thing you noted was the return on equity. So you still think they're doing a good job, right? What's the outlook in
I think they're doing I think they're doing a good job. The challenge with Kroger is the fact, they have an incredibly high rate on equity when you look at 19% versus the market that's roughly around 12%. The challenge with Kroger, though, is the fact that their economic performance has been stagnant over the course of 5 years. So that leads me to wonder, what kind of money are they going to be able to invest in their staff, training and development, as well as workforce retention?
Yeah, could you just explain that when you make growth and the cost that they have to pay to do those things you mentioned? Where does that fit in? I mean, are you talking about how customers are going to be spending? What's the story there? Just an explanation, Jason.
Yeah, great question. An element of it is how customers are going to be spending, but I think another element of it is that if Kroger cannot actually afford to give raises, let's say hypothetically they can't afford to give raises, well, that staff is going to go elsewhere, especially if instead of going to Kroger, I can go to Schnucks, I can go to Deerbergs, I can go to some of the other stores and possibly make $2 or $3 more. And if Kroger is not in a position where they're able to actually staff up, as well as when you look at the fact that many of these grocery stores are having to move toward automation, not only from the fact that it might be more cost efficient, they also can't find employees. I think Kroger's performance as a whole might potentially suffer in the long run.
What do you think of that, Arun? I know I have a lot of questions for you, but is that a fair thing to sort of keep in mind when it comes to Kroger about staffing?
Yeah, I mean, I think, staffing levels and wage pressures, that's been an ongoing concern, not just for Kroger, but for all retailers in general. That's one of the reasons why Kroger is pursuing this merger with Albertsons. It's because both retailers are largely unionized, and so they're facing a bit more wage pressures than some of the non-union competitors out there, namely Walmart and Costco and Amazon. But yeah, I mean, that's an ongoing, concern, and it's reflected in their guidance, and it's something that, we model, we have modeled for years, and we'll likely continue to model higher wages. And, that's just, like I said, an ongoing concern for the company.
Yeah, where do we stand on the Albertsons merger? Where are we? What inning are we in with the actual deal to be done?
Yeah, I mean, I think we're in the mid to latter innings on the merger. So, the deal was moved the FTC moved to block the deal, and now Kroger and Albertsons are going to court this summer to fight it. Kroger just recently amended their divestiture package with C&S Grocers. If you recall, the one way to try to get the blessings of the FTC is by divesting several stores. And recently, Kroger increased that divestiture package with C&S Grocers. They also increased other things in that divestiture package, non-store assets as well. So they're really going to the court this summer to try to fight this proposed merger and try to get this deal to go through. We still believe that it's more likely than not that the deal won't go through. There's a lot of concerns with the FTC. I think one of them being that the company that's going to likely buy these divested stores, C&S Grocers, they're primarily a grocery distributor. They're not primarily a grocery retailer, and I think there is some concern there because they just don't have the expertise to run a large-scale grocery business. So like I said, we do believe it's more likely than not that the merger won't go through.
Yeah, they actually said on the call, it also positions C&S to be a strong and successful competitor. This package that they have to do and the regulatory challenges that they're facing. I mean, when we think about, Jason, we think they have pharmacy, they have grocery. They talked about the pharmacy business. They expect profitability to We expect pharmacy business profitability pressures to carry over into the second quarter. So there's the pharmacy story, there's grocery, there's fuel. You want to comment on any or all of those segments, Jason?
Yeah, I'll say that overall, when you look at Kroger's business, when you look at Albertsons business, they are facing a headwind of change from a consumer standpoint, but also the fact that the economic factors are pressuring that business. I mean, even when you consider that Walmart, they've closed a number of their pharmacies. I just think that this is sort of the trend that we're seeing. The hope is that it will rebound eventually, but right now, unfortunately, that's the trend that we're seeing.
Yeah. What's the, I don't know, do you have a hold rating, Arun? What's your price target?
Yeah, we have a hold rating, and our price target is now $55. We did lower it this morning from 59 to 55. And our hold rating is really on the issue of potential margin pressure. One thing we didn't talk about is that a lot of retailers are right now announcing price cuts. Kroger is as well, trying to lower prices. So there might be some price wars brewing in the retail industry, and there's some concern that can eat into margins as we progress into this year. So yeah, like I said, we do have a hold rating, and our price target is $55.
Yeah, there's a lot of grocery, there's packaged food. I think you cover a lot of that. Do you have some buy ratings to mention here today so people can look them up for actionable advice, Arun?
Yeah, so I mean, our top retail stock is Walmart. No surprise there. We also do like Dollar General. It's kind of a turnaround story. We do like Dollar General, and among the packaged food stocks, our top picks are McCormick & Company and the Kraft Heinz Company. Those are our two buy ratings in packaged foods.
Yeah. And Jason, when you're looking through these, do other names seem like winners to you? Are you buying stocks, or are you doing more of the analysis of because they, for example, paused the buyback. What does that mean to you? So how are you going around sort of noting the winners in the group, and which ones are the winners in your mind?
I'll tell you that, and I've been accused of being an unabashed fan of Walmart, but it is what it is. I think Walmart is clearly, is a big winner. Also, when you consider that Walmart, even though they've announced that they are closing 11 stores, you have the fact that they're reinvesting as well as building 150 new stores in addition to their Store of the Future model. So I think from a stock perspective, Walmart is a safe bet overall.
Great to see you both. Really appreciate it. Arun and Jason, thank you. Arun Sundaram, CFRA Research, Jason Greer Consulting. Thank you. Thank you, friends, for being with me. I'm Nicole Petalides. I'll see you at 2 p.m. for the watch list, so join me then. In the meantime, download our free Schwab Network app in the Apple App Store 24/7, schwabnetwork.com. Fast Market is next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. So she had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network. Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies in Meta Platforms, which is up over 40% so far this year, and got another price target hike. And Taiwan Semi, which has bounced about 18% so far this month on the back of chip AI demand. And like Folio breakdown consumer sentiment data on CarMax, which has fallen about 6% so far this year into earnings tomorrow morning. Now let's take a look at the major indices, which are off of session highs. We were strong to start the day, been weakening throughout. The S&P 500 flat, the Dow Jones Industrial Average up about 75 points, or 0.2%. NASDAQ off just over 0.1%, and same for the Russell 2000, some weakness. To help me break down this market action, let's bring in my co-host. That's Kevin Hinks. And Kevin, a little bit of a breather here for the market rally. S&P did touch over 5,500. That's far above what a lot of the analysts had predicted for the end of the year. I think there's only a couple firms out there with higher price targets for year-end price targets.
We've lost the NASDAQ, Tom. Even
down
with NVIDIA up, the NASDAQ is not holding. It's bracing under the weight of the momentum, of how much it's moved. But it's interesting. You know, I've been talking about this all morning. The open interest in these NVIDIA options is gargantuan.
Right.
And the fact that it moved over 140 and then back under, how about this? I've got the numbers right here. If you look, it's 143,000 140 calls. So think about that. By tomorrow at the bell, that's either going to be 0 deltas or 100 deltas on 14.3 million shares of stock. And that's, Tom, it's every line.
Right.
It's got massive numbers. Now, the fives and the zeros, 135, 140, 145, 150, those have the biggest open interest. The 135 puts, 121,000, the put side.
Does that bring into the discussion about a gamma play before going into options expiration? Because Goldman Sachs came out with that note, and I think you mentioned it last week, over $5 trillion of option notional value expires tomorrow. That's the biggest ever.
Yes. It's because of the stock split, but it's also because of massive interest in NVIDIA, along with a 10-for-1 stock split. So it's not a 2-for-1. It's not like your options doubled. Mm-hmm. They went up 10 times.
Right.
So could it be, could there be something crazy going on? Mm-hmm. Yes.
Yeah.
They're good.
And the S&P 500 at that 5,500 level for the SPX, there's really big, massive call open interest there, which could do that gamma play where, if it goes higher than 5,500 or lower than 5,500, these traders that are long these options are going to have to, start to buy and sell the options or do something in individual names.
With the exception of Vega, Every Greek, as you get closer to expiration, heightens in its volatility, right? And gamma tomorrow, if it's near this 140 strike, remember, if it goes 139.95, those deltas are zero. If it goes to 140.05, it's 14.3 million. I mean, it's massive what could be happening tomorrow.
And it's funny because I always talk about like the S&P 500 to give that gamma play in there where there's long open option open interest in a specific strike where it'll trade around there no matter what's going on in the overall market because there's such massive size that has to hedge it. And you bring up NVIDIA, which is basically the market barometer at this point.
Yeah, exactly. I mean, you know, it could be interesting to watch tomorrow, but the fact that it went through 140 and now hasn't held it, if you're short the 140 calls, you're covering, and now it's back down through it. Oh, it's, you know, I've been there. I've traded these. And I can tell you, that's a long day on Friday.
I don't sleep too much the night before when I've had positions on like that before when I was a market maker. So I totally get that.
Tomorrow could be real interesting.
Let's bring in our next guest, Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, wanted to get your take here on just the general rally that we're seeing in the optimism in the overall market. I read a stat today that U.S. household stock allocations reached an all-time high. So maybe the optimism's warranted if more people are getting in, into the market at this point.
Yeah, obviously at the backdrop is the whole AI, secular growth story. What AI has going for it is because we can't exactly quantify what that TAM is, 1 year out, 2 years out, and then you get announcements from the likes of Tesla talking about Dell and SMCI, getting their racks there. And so that kind of props up, you're getting these continual announcements around AI. And because you can't quantify it, that allows near term, at least, sentiment to get stretched and you can overshoot to the upside because you don't know if you're overvalued because you don't know exactly how big that TAM is going to be. Similar to the internet back in the late 90s, that because you were not really clear on how we're supposed to value these stocks now, because of this technological shift, that allows for upside and momentum to continue. On NVIDIA, I will say, what would I look for if I've been writing tech here? The Momo chasers have been rewarded. Dip buyers have been rewarded. We're at fresh all-time highs. Buying begets buying. Momentum begets momentum. But at some point, there will likely be, some kind of a correction. What would I look for? Something like a, bearish near-term reversal pattern. Let's go back to March 8th. NVIDIA ran up on this day, gapped up to a new fresh all-time high. At that time, it was around $954, ran to $974, and then dropped $100 intraday. There was your bearish engulfing candle. NVIDIA corrected 20% from that basically signal that we got from a trading perspective. What was the RSI on NVIDIA on March 8th? It was 83. What was NVIDIA's RSI today? 83. I'm not saying it's going to happen again because we don't know, but I just want to point this out. And then it's like there's like 50 stocks that are really getting a lot of this money flow. Look at Costco, RSI 82. Look at Eli Lilly, RSI 82. I mean, that's very unusual to see, the likes of an Eli Lilly or a Costco get above an 80 on an RSI. So it's this money flow that's going after the winners. The winners are winning and they continue to win. And there's a reluctance to shift over to some of those underperforming areas of the market.
Yeah, and
77 on the S&P.
The S&P 500, 77 relative strength index, 77 on the S&P 500, 80 on the NASDAQ, or was it's 80 on the NASDAQ. So overbought conditions on a technical basis, but as we all know, those can stay above maybe what some people want.
They can and they have.
Yes. Kevin, let's dive into the data today because jobless claims came out about in line, I would say. Housing starts slid, and this is after. And the housing data that we got on the day off yesterday, weaker than expected also. So there's been some cracks here in the economy a little bit, especially in housing.
Yeah, I mean, these numbers, I don't see any data point that we got this morning that was good, right? Mortgage apps, you thought they'd be up more and refis were down because rates have come down below 7%. I was expecting that number to jump. Now, it jumped a week ago, but it didn't follow through like we thought. Starts and permits, big misses on housing starts and permits. Jobless claims, not as high as last week, but still close to 240,000. That's the higher end of the range lately. Philly Fed, miss. Bank of England held rate. They didn't do anything with rates. Nothing real great. The dollar's higher, yields are higher, crude oil's higher, and for a while there, the market was higher.
Right. Well, I equate that, and let's bring Nate back in on this discussion, I watched the futures open up last night at 5 p.m. Central Time, as I typically do. They were relatively flat, and then, you get news overnight, Nate, that the Swiss bank cut for the second consecutive meeting, another quarter basis point for them. Bank of England held steady on a 7-2 vote with this, but it's almost like, Nate, some of these other countries, I don't know if it's trying to reconfigure their currencies at this point, but the pressure's on the Fed at this point right now, especially, we saw the quarter basis point cut in Canada. I mean that more of these central banks are going to get closer and closer to cutting, and, we're still at about a 64% chance of a September cut.
Yeah, I'm not so sure how much it's going to influence the Fed. I mean, it's an open-ended question. I'm just not sure. I'm not saying that doesn't have any impact on the Fed because obviously, we're all kind of tied and there's these tractor beams between currency, between rates that happens internationally around the globe. But Powell seemed pretty patient in terms of, he talked about some of the inflation data that's going to have some tough, base effects coming up for the remainder of the year, and that there didn't seem to be any urgency. And, I think that a lot of this narrative around being in a restrictive policy, I think the assumption was, look, if you're going to, raise 525 basis points in lightning quick speed like that, something's going to break and it's going to show up in the economy. And, it just hasn't been the case that we've gotten consistent evidence that the economy is actually getting hit. So I think that as long as, the data continues to show stability in terms of, GDP, employment, et cetera, and nothing's getting, too much of an outlier, I'm not so sure that the Fed's going to change this tune. Maybe we get one in December, maybe two. It's possible. I know that there was a lot of talk about that at the last FOMC meeting in terms of, the decisive votes, and it was 1 to 2 basically cuts. But is that going to make, that big of a difference? Even if we get 2 for this year, that's the market expectation. And if we get that, is it, what kind of an impact is that going to have? I'm not so sure that it's going to be that significant. Maybe it's more of just basically the message that gets sent once they do their first cut. And I think that's why they're being patient about doing that, because it's going to be difficult to cut and then go back to a raise if inflation comes back.
Yeah, and there was comments out of Fed Kashkari this morning. Probably take a year or two to get inflation back to 2%. Wage growth might still be a bit too high at this point to get back to 2%. So,
well, remember, the wages numbers went up in the last payrolls data.
Yeah, and I mean, that kind of is reflective of Nate's thought here. The economy's still strong. Why does the Fed have to cut at all? I don't think they want to cut until they're going to be on a path to cutting repeatedly. So why start it now when the economy is still doing well?
If this was another generation where we were young traders, there would just be nothing. There would just be silence from the Fed. They wouldn't be out there speaking every single day and having a meeting every month. And even if you don't move, you have a press conference to say why you didn't move. There wouldn't be a press conference in a normal meeting. So the new transparency of the Fed just beats you over the head with the mundane day-to-day. How many different times can we say we're waiting?
Right.
The market's sitting at all-time highs. Why do I need to cut rates?
Right, exactly. And I think the jobs data backs it up the most, those wage growth numbers. But Nate, I saw this other stat. I think Kevin Horner, I think, put it out there from Schwab. 10% of members in the S&P 500 made new 52-week highs on Tuesday. Does that kind of go into that narrative, Nate, that, hey, this isn't a broad-based rally by any stretch of the imagination. This is one of the narrower rallies that we've seen to all-time highs.
It is, and it's been, because we're trained to look at our history books and get a sense of, what type of participation you want to see to confirm a bull market. And, this market is different. I think it has to do with the digitization of the economy, of course, the ecosystems and the cash hoards that mega cap tech has, and the fact that it's been an issue for a while, but it hasn't been a problem yet. And as long as it doesn't appear to be a problem, and what do I mean by that? I think as long as mega cap tech continues to dominate in terms of earnings growth and to show that they are justified in terms of their valuation, and there's no cracks basically in that narrative, then I think this narrow leadership likely will continue to hold there. But yeah, you look at market breadth, I think back on basically at the end of March, we hit a cycle high in terms of the percent of S&P 500 members above the 200-day simple moving average, and that was around 85% or 84% in late March. Currently, we're about down to 70%. So even though we're at fresh all-time highs, the participation as measured by that metric, those members above the 200-day SMA, has dropped from 84 to 70. So that's that money flow that's chasing those top 50 names that continue to perform.
Yeah, we got the chart up there, the S&P 500 with that RSI at 77. And such a narrow rally. You mentioned the number of companies or percentage of companies above their 50-day moving average is right around the 50% line. So not overbought in many aspects or parts of the market at this point. So maybe there's more room to run. I think a lot of people expect that. But we're here to tell you maybe different on some occasions. All right, guys, let's take a quick break. When we come back, we're going to take a look at Meta Platforms. Company got a price target hike to $540 a share today, up over 40% in 2024. Stick around. Fast Market's coming right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking Meta Platforms. Stock got a price target hike out of KeyBank up to $540 from $475. Keeps an overweight rating on the shares. And I think this is all on the back of ad spend. They consider ad spend is going to remain robust. Kev, when you look at that, that's the key for them. It's all about advertising. Over 3 billion daily active users across all their platforms. They've got the eyeballs, and the ad dollars are flowing into this company.
Yeah, it's the lion's share of their revenue every quarter, as you know, and those numbers are growing, right? The digital ad spend market is actually pretty healthy and vibrant, and Meta's doing a really smart thing. They're starting to bring in more video content and search functionality. And why? They're targeting the lower age demographic. They're targeting millennials and Gen Zers that maybe before were a little more Instagram, more Snap in there. They're trying to bring them onto the Facebook platform because whether you want to admit it or not, that's where they make most of their money, on Facebook.
Yeah.
Advertising.
And Nate, if you look at it, they kind of don't even talk about the reality labs anymore. That was a drag of about $3.8 billion last quarter. But that doesn't matter when you're seeing that growth in the advertising. Even their CapEx spend is starting to ramp up because they're buying all these, these AI